Let's bring in Terry Duffy. He is the CME Group's chairman and CEO. It's good to see you. Welcome.
Thanks, Scott. Appreciate you having me on.
Yeah, it's good to have you here. So what's your take on what the Fed chair has been saying, including today, leading us to believe that there may be not one rate hikes to come this year, but two?
You know, Scott, I've been a little critical over the years, and I've even said this to you many years ago. I thought the Fed would miss many of opportunities to take the advantage of tightening rates throughout the last several years, and then we did it all at once. But I got to be honest with you, I didn't see the markets reacting the way they have, especially with all these tightenings over the last year. I think I kind of agree with Josh. I was watching your show a little bit earlier. I think actually the Fed's done a pretty amazing job in the last 12 to 14 months here by taking, up 500 basis points, and, the equity market's still continuing to rally. So I think there's a lot of people that didn't believe that could happen. Maybe I'm being one of them as well, but I'm here to manage the risk, not predict the prices. But all in all, it seems like the Fed is going to continue on its path, and the equity markets are going to continue on its own path. And I actually think that's a good thing, and it benefits us here at CME Group by trading both asset classes.
Do you feel like you want to manage your risk even more because you've been somewhat surprised by the durability and stability and strength of this market rally?
I think that's a great question, Scott. And all you have to do is replay your show and listen to some of your guests, especially the last one. You got a big bear, and then you'll have a big bull come on earlier. There's such a disparagement of opinions out there just on your show and throughout the world about what people think the market's going to do, whether it's going to be the first half of 23, which people seem to be wrong, or the second half of 23. So then we'll get into 24. So I think there's no question about it, Scott. People need to manage their risk through all these different asset classes because no one knows for sure. But we do know one thing, Scott. There's a tremendous amount of uncertainty up and down all the different asset classes, from energy to commodities to interest rates to equities. And that's that's just not a U.S. issue. That's globally. So I think, yes, you have to continually be very vigilant on managing risk because margins are thin. And right now we should take advantage of that, and I hope people manage risk. We saw what happened with SVB Bank and some of the others by not managing risk, and I hope there's some lessons learned from that. So, again, managing risk is critical to the growth of any organization.
Yeah. Why do you think we've hung in there the way we have, Terry? I'm sure you must get asked that question. How have we stayed so strong?
I do, Scott, and I try to avoid it because of what I do. I manage the risk, but like I said at the outset, I mean, when you look, I think people were so paranoid of any interest rate hike whatsoever, and if we couldn't have free money, then the markets couldn't go up. I never subscribed to that. I mean, I don't think you have to have interest rates at zero for equity markets to go up. So I think the market has finally realized that over the last year or so. And I think that's one of the main reasons why the market has continued to, impress even the biggest of bears in the world.